Hey, good morning. Welcome to the Mortgage Rate Forecast with Criss, your mortgage rates and news. It's August 11th. And as always, let's get going with the charts. Here's what we have. Bonds are trading pretty low this morning at about 103.66, really right toward the bottom of our trading range. Our support's coming in below us at about 103.60, and secondary support right around $103.40. So about a 20-cent difference here. As far as resistance, still right at 104. Bonds are having a hard time breaking that. They actually approached it yesterday, and you're going to look at me and say, how did they approach it yesterday? Look at that chart. It didn't even, really come too close. Well, well, technically there was a coupon rollover of 20 cents, and that actually came out day before yesterday. So we did test it. We did test it the top of the trading range, but we can't really hang. So still 104 is above us. Import prices, unemployment came out today. Really wasn't too bond friendly, and really, even though unemployment came out right at expected, we're still at 40-year lows as far as unemployment. So we haven't seen unemployment this low since the 1970s. So that's actually a very positive thing for the economy, and definitely good, really good news. Not so much bond friendly, right? Because bonds are kind of like that safe haven. Investors want to put their money here when they're worried about other stuff in the economy. But anyway, really good news. What that does, though, guys, is that increases the probability of the Fed actually increasing the short-term rate, because that does show sign of economic improvement. So anyway, good news for the economy, not so good news for bonds. Here's the thing to watch out for tomorrow. Tomorrow's going to be a big day. Retail sales and the PPI is coming out. We'll see what happens with that. That could be those reports could be some pretty big market movers. So if they come in better than expected, we could see some bonds sell off, and mortgages getting a little bit more expensive. Opposite is also true. So kind of quantify where we're at. Freddie Mac reported the average interest rate to be at 3.44, and the average consumer paid half of a point for that interest rate. The source is down here at the bottom. And so to kind of quantify where we're at, we were averaging bond prices about 103.80. We're currently traded about 103.66. So that's about 14 cents worse. That means the average consumer, to get something similar, is probably going to pay about 14 cents more, or instead of paying half a point, maybe closer to 1.64 points. So at any rate, not quite as good as we were at where we were at last month, but still not bad. Historically, we really are at some lows. So here's the scoop. Analysts are pretty consistent. They're staying pretty neutral right now on both long and short term. My forecast is for bonds to range between 103.60 and 104 still. I'm going to hold that range. That means that I don't think rates are really going to be moving. I think rates are going to go, for the most part, unchanged. But I think we can see some fee improvement of about a quarter, maybe as much as a half of a point, or 3/8 of a point, somewhere around there. And we could see fees actually get worse, but I don't think they're going to get much worse. We're right at the bottom end of that trading channel. So here's the scoop, guys. If you're floating right now and you want to play it safe, not a bad idea to lock in. Never a bad idea to lock in, but if you're willing to gamble a little bit, we do have more room for improvement than we do for loss. So if you're willing to gamble and just kind of float it through tomorrow and see what happens, I think there's a better chance that you could improve versus get worse. So that's the forecast. Anyway, that's it for now. We'd love to hear from you guys. Leave your comments down below, and everything likes to be liked, and so does this video. And if you're thinking about getting a mortgage or refinancing, at the top left you can hit subscribe, and that will just give you a quick little alerts when we upload new content and new forecasts, and then you can always unsubscribe when you're done with it. And if none of this made sense, you're kind of scratching your head and you're saying, hey, what do these bond charts mean? How's this impact me as far as getting a mortgage? Top right, that is Mortgage Bonds 101 link. That'll take you and show you the basics that you should probably know as a consumer, and how mortgage-backed securities trading actually impacts you, no matter if you're buying in Florida, in Alaska, or California. It impacts everybody the same. Anyway, that's it for now. Have a great day, guys. We'll see you next Tuesday. Bye-bye.